Okay. Pre-flight check. Camera 1, good. Audio input capture is a go. Talking head, present. Charts. Oh, we need charts. There we go. Charts, good. Back to the big head. Hey friends, how you doing? This is Ernie with PatternCast, also with Trader of Futures. That is my old moniker, Trader of Futures. If you go way back, I was once known as the Apple Investor. That's when I first started in this foray into social media back in 2006, 2007. Anyways, today's topic. Today we're going to talk about the efficacy, the usefulness, or even a comparison between technical analysis and signals, or things that are generated by a system, an artificial intelligence, pattern recognition, software, intelligent software. Things that look at data in a certain way without the inherent flaws that each of us have as a human, unable to be fooled by the randomness, as they say, sort of paraphrasing a Nassim Taleb book, which I highly recommend that people read. Does technical analysis work? So I don't know that is really the right question to ask. Because first of all, if I were to ask it that way, does technical analysis work? Would I be able to create a prescriptive program or methodology or system, and if I followed it, that was all predicated on the concepts of technical analysis, would it work? So this is, now consider what we're talking about here. We're talking about the markets. The markets are, I think, widely considered to be random. That they don't have necessarily a predictive nature in the large. It is possible to predict things in a very, very short time period with some kind of specificity, but although that even there is a challenge. But is it possible to look at the past few bars and the momentum and then be able to predict what's going to happen in the future? Can you use technical analysis with chart patterns and overbought, oversold indicators and oscillators and moving averages and predict the future? Now, a lot of people will say, of course you can. I do it all the time. I make lots of money with the proper money management. But nobody today, to this date, has ever been able to create an algorithm, even in computers, an algorithm that uses technical analysis precepts and then create a winning system, ever. Sure, it might win for a little bit. It'll eventually fail. Now, I've done this type of this study literally thousands of times. Looked at virtually every single technical, analytical method, indicator, pattern that there is. I've created thousands of automated strategies. I've changed all the different configurations of them and mixed matched them, did all kinds of combinations. And while some can give you, for some period of time, some predictive capability, none of them ever work consistently across markets for any period of time, for any lengthy period of time. Period. It just doesn't happen. You know, it would be like if you were to go to the horse track, right? And then lay odds on the horse that you want. And if there were a way that you could evaluate all these horses and then lay your odds so that they're superior to everybody else's and win consistently, pretty soon there wouldn't be any horse races, because all the edge would be gone. By finding an edge and everybody knowing the edge would be gone. But the reality is that the edge is fleeting. It changes constantly, randomly. And it's no different in the stock market. Now, there are methodologies where you can improve that level of predictability, but not through technical analysis. Pattern recognition is probably the closest thing you're going to get to any kind of edge that you'll ever see in the markets, where you can recognize things that have happened and then quantify them, categorize them, qualify them. And if there are enough occurrences of them. Now, this is something that they don't do in technical analysis. Nobody ever looks at a candlestick pattern or a bull flag and then tells you, with that specific asset class, under these conditions, here is the probability of it going up or down. It doesn't come out of the box like that. There is just this sort of general feeling. And I really mean that, a general feeling. There is no quantitative, only qualitative information out there about the various technical aspects, technical indicators, techniques that people use. Now, not everything is like this. I mean, there are ways to find predictive nature or to analyze what's happening in the market today, what is most likely to happen. But it's definitely not with technical analysis, because technical analysis doesn't have the scrutiny of any kind of, for any, as a general rule, does not have the scrutiny and the study done on any particular asset under those conditions. What is the potential outcome? We just take it for granted that when things get overbought, that you should sell them. When they get oversold, that you should buy them. Probably the most simplest of all things is, of trading would be, the RSI. And we know that things that are above a 70% RSI are considered overbought, and anything above there we sell. Things that are below 30 are considered oversold, we buy. That is the simplest of all, in the sort of the basis of all oscillators and all overbought, oversold conditions. And none of them actually provide you with any kind of predictive nature. You cannot get up there and say, I can consistently get, say, 67% win rate on this. It doesn't exist. Same can be said for moving averages, crossovers, MACD, stochastic. Money flow, you could go on and on and on and on and on. And no matter how much you combine them, mix and match them, all you're doing there is just adding to the complexity, adding more criteria, which just sort of obfuscates it even more. There is no combination. There is no consistently predictive nature across all assets, any time frame. That is just a fact. So when someone comes out with an indicator and then claims that it's the only indicator, the best indicator you'll ever need, that it provides you with a real edge. They don't have any, I can guarantee you that they do not have any quantitative data backtesting to back it up. They can't. It cannot be proven. Now, there are some techniques within some asset classes, given a contextual understanding around that particular asset. So, in other words, if you knew something about treasuries, or you knew something about energy stocks or crude oil and events that happened, and you can quantify under certain conditions patterns that happen given a certain event, and you can narrow it down to that like that. So you have this hypothesis, superior information, and then use technical analysis to identify this context. Then it is possible to start approaching some sort of predictive or predictability. But TA, out of the box, applying to any random price series data, simply does not work. So you may ask, well, how is it that some people are actually making money? Well, that's the key. Some people. Some very, very small percentage of people actually make money using technical analysis. We put that percentage at under 15%, well under 15%. Now, a portion of them, you can attribute that to pure luck. How can you say that? How can somebody be lucky all the time? And they can. They really can. I mean, if you do the coin flipping experiment with 1,000 people, for instance, or 1,024 people, let's say, and you're looking for the person who can flip heads most often, and you flip that coin, first time you have 500 people left, approximately. Let them flip it, you have 250 people left, approximately. You flip that coin, you have 125 left. You keep on doing that right down to, there'll be one person that will have been able to flip out of that 1,000 people, that will have flipped that coin 8 times in a row, seemingly impossible to do. Imagine hitting 8 big winner trades in a row like that. But there will be a person that will be able to do that. That's just out of 1,000. Imagine out of 1,000,000. And then you take the subset of that 1% of that million, and look at the longevity of their lucky streak over, say, a long period of time, over a lifetime. There are some people, purely as a function of luck, that win all the time. There are some people that can combine superior knowledge and intuition and experience along with that luck and appear to be winners as well. There will be another small subset of people that may not have all the luck, but practice good money management, do have some luck, and also have superior knowledge that win a lot. Again, this is a very, very, very small subset of people. Now, there are techniques, there are statistical ways to give yourself an edge, but they have to be proven. You have to see that they actually have an edge. So there are certain assets, for instance, that if you apply certain technicals to them, will win more often than not. But it's relegated to that asset, this series of configurations, for whatever reason, aligning up with some other kind of market event that seems to work for that asset. That happens every once in a while. I can think of one that I used to talk about quite often that I would call the over-the-weekend trade with Apple. And it worked for 30 years until it stopped working. It stopped working for about 6 months. Then it started working again. The over-the-weekend trade with Apple, for whatever reason, and my hypothesis is, and I don't have the proof of this, but my hypothesis is that there was some kind of because Apple is a widely held stock amongst all major funds, there must have been some kind of transaction that was happening consistent across funds that allowed this phenomenon to happen. And it goes like this. If Apple on Fridays is showing some momentum to the upside, and you buy in the morning, and then sell at noon on Tuesdays, you had an edge, a pretty significant edge. And that worked. As a matter of fact, I developed a whole service around this. I mean, I found it, because I was doing all these price series studies. And there were certain parameters around that, and some work better than others, but I called it the over-the-weekend trade, and that was what I originally did when I was known as the Apple investor. I had this service out there for several years. There may even be some people listening to me right now that actually were part of that service, and you probably remember it. There was one point where we had, it was one trade a week. There was one point where we had 24 winners in a row. Imagine that, 24 weeks in a row. Then you have a couple of losers, and then another big long streak. So we did this service for a couple of years, and it worked great. And then, all of a sudden, one April, it stopped working. Stopped working for 1 month, 2 months. People were like, what the hell's going on here? We're just so easy. It's like a cash register. And it just stopped working. And then the service kind of went to hell. 6 months later, it started working again. Those are anomalies. And they happen every once in a while. With certain stocks, under certain conditions, because of other market events that we don't see, but they are there. There is something that was happening in the market. Probably had to do with hedge funds and mutual funds and how they do their transactions. Moving money in and out. I don't know what it was. But it definitely was happening. And it doesn't happen. It doesn't happen nearly with the kind of regularity anymore. I'm certain something has changed. Or maybe it was just luck. Could be. So at PatternCast, we do something very different from technical analysis. We look for this underlying pattern that you can't see. Like there was this underlying pattern in Apple that we couldn't see, but we were tapping into it. PatternCast has that ability to find these kind of patterns that happen with a high degree of frequency that we can't see. It will evaluate decades, not like most technical analysis where you're only evaluating the past 20 bars and then trying to guess what's going to happen in the future, which is akin to looking in your rearview mirror while you're driving to predict where you need to go. PatternCast finds these patterns, this behavior, events, or whatever that have happened in the past. It evaluates what's happened in the recent past and then finds patterns. Again, things that we can't see that exist in that decades of data, and then can evaluate them and say, hey, this is very much like this is today. How many times did that happen? Oh, maybe it happened 20 times. And out of the 20 times, what would happen if price moved up really high or moved down really low? And if it saw some repeatability in there, it could report back all the different occurrences of when that happened. And these are really obscure things that we, like I said, you can't see. So there's something in the underlying data that's in there that you don't see. Some market event that PatternCast uncovers. It sees it. It quantifies it. It says we're now approaching that same kind of situation. And if we move very high to this level or this extent, or we move very low to this extent, it's either a sell or a buy, respectively. Because it's happened 30 times before out of 35 times. That's an edge. That is an edge. Not something that it's not something we can prescribe. It's something that a computer can do, but it's certainly not something that a human can look at because, first of all, you can't even see these patterns. There's also, I think, some predictive nature in volume profile. And that's because we're not evaluating necessarily momentum or things that happened in the past. Where with a volume profile and volume nodes and volume wells, we are getting a picture of the market and the people who are have found value at certain price levels, and also with a high degree of certainty whether or not they are holding positions at that point, at the present time. And there's behavior that we notice when price moves across these profiles. And we've been able to identify that behavior, certain characteristics. So in volume profile, if you can identify, and of course that behavior gets exemplified depending on the direction or the prevailing direction of price. So if we have like nodes and wells and prices going up, it behaves a certain way. If it's going down, it behaves another way. And so it has some predictive nature to it. But it's still not, it's still just another sort of discretionary technique. However, we're looking at possibly quantifying that as well and seeing if we can find patterns in that. But right now, we only use price data as our guide because it encapsulates everything. Price data encapsulates, well, not everything, but most things. The time variant and price. It'd be really cool if you could also include into that volume, because those are the three primary things that are included in a time series data for any kind of asset: price, time, and volume. Yes, Ernie does know his powers of two. Soon he will start speaking in binary. It's interesting, that you should say that, because, when I first started my career in technology, very early on I worked for Raytheon, and this is back in the 70s. And we didn't have the advantage of, a lot of advanced operating systems and computers and things like that. I mean, we had all the computers that we actually had to build them. And so when we built them, we had to program them, but we didn't program them after we built them, because we didn't have fancy operating systems. We would develop our own operating system and then program them literally in binary or hex using dip switches. That's how crazy it was back then. So anyways, TA works for some people for one particular reason. Because they have experience in the market, they may have superior knowledge to some other people that gives them a slight edge. They could be lucky, and they have intuition. And they may be disciplinarians when using, these techniques. They find something. They find something that they see that other people don't see. In the same way that I found something with Apple in the over-the-weekend trade, which we call the OTW trade, that I only saw after doing price series and 3D exploded charts of price, in Excel, and then all of a sudden I saw this pattern emerge. It wasn't a very definitive pattern. You ever look at like really random data and you kind of fuzz up your eyes a bit, cross your eyes a little bit, and then you start seeing the edges of data. That's kind of like what I saw. And that's what I went on. That's how I look at PatternCast. It sees these sort of edges of data and these amorphous images, and then can identify whether or not they repeat over time, and then says, hey, we're approaching this sort of thing. here are the situations that we could approach going forward, and this is the ending result that's happened many times in the past. And so it pattern casts. And so far, at least over the past, 2 years that we've been examining this with market data, we're showing extremely consistent, very consistent results in terms of its predictive nature. So Jack Daniels is saying, hi, your PatternCast has been in operation for a while now. I see you're working out of your basement. How much have you made off of your technology? The business is relatively new. Am I working out of my basement? Where else would you want me to work? You know, my wife has the office upstairs, so I get this with my own bathroom and refrigerator and media center and exit. I'm not sure exactly what that has to do with anything. But I choose to work here rather than finding an office somewhere. Why would I do that? So the business is just over a year old, turned a year old on October 5th. And we're continually developing it, bringing on new people. We've now got about 300 customers, and we're looking to build that business. Crypto Red Alert. As a critical thinker, if your software is so wonderful, why would you share it with the public? If I were in your shoes, I would keep it for myself and play big without challenging other traders. Well, that's you. We are both using it for ourselves, and also we recognize that this is something that we can make money with, that we can develop a sustainable business. Wouldn't you rather have a bunch of people paying you on a monthly basis or a quarterly or a yearly basis without having to, pedal the dirt every time to try to make that money and scale that business? Other people paying. It's like, what would you rather do to make money? Wouldn't you, like if you were going to get into real estate, right? And you're going to buy a house and then sell it later. Would you rather you be paying the mortgage on the house, or would you rather have somebody else in there paying the mortgage for you, and then scale that by having multiple houses and other people always paying for you? And then you receiving the benefit not only of the cash flow, but also the appreciation and someone else paying your mortgage. That's like a no-brainer. Same deal. That's why. Because it's a good business. There's less risk in having many other people bring in the money here. And we can provide a great service to other people. That's why. So as a critical thinker, that should be apparent to you. And the fact is that we do have other larger concerns that are interested in the technology, and we are interested in licensing it. But the other thing is that PatternCast goes way beyond just this application towards markets. It can be used for a wide range of different things because it is a more generic pattern recognition technology and very different from other things that I've seen out there. And so we're looking at applying it to many other types of businesses. And so that's how we're going to scale. We can scale both horizontally and vertically with this. So that is the overall idea. Anyways, hopefully this has been enlightening to you. Now I'm going to go on to the charts and see where we're at. All right. So here's Bitcoin. Let's zoom out a little bit. See that we're in this what appears to be this sort of pattern that continues to move sideways. If it moves sideways much more, then it's going to start becoming a channel as opposed to a bull flag. But regardless, we have a trade currently that is right about at this yellow line here, and it's a short. Let's see if I can go on and find another example of this here. Where did it go? Well, anyways, let's zoom in on this guy here. So our current short is actually at 85.07, which is right about there. Overshot it a bit. We're looking for it to, now that was taken 2 days ago, so we have 4 total days for it to realize its potential. That's what PatternCast does. It looks at up to 4 days. Let's see if we can measure that out. So we're going to go 1, 2, 3, and then 4. So what I just did there is, what I'm saying is that PatternCast, it has a limited scope in terms of what we believe is a highly predictive area of opportunity. And what we found is that 3 days, it's very highly predictable, but 4 days seems to be better. 5 days, things start dropping off when evaluating things like this. And PatternCast will look at, so I'll give you an idea. So let's say that we're coming up to the next signal area, which would be right about here. PatternCast will look back at maybe about this much data. It will then evaluate this much data going back for the entire history of whatever asset that we're looking at. It'll see patterns, and it will attempt to say, hey, this looks similar to this happening or this happening. And then it will provide what-if scenarios. What happened after that? What happened if it went up to a certain extent? What happened if it went down to a certain extent? And then it will tabulate all that data. And if it finds something that was statistically significant, in other words, it happened at least 70% of the time. Actually, we don't even put signals out unless it's at least 80% of the time, although we have put some out that have been as low as 75, but we're looking for 80 or better. If it's happened at least that amount of time, then we'll find what is the mean entry, optimal entry, and then the mean target, and then we'll report that back as a signal. And then every day, it goes another day ahead and evaluates it again, and then evaluates it again, and evaluates it again. Not every signal gets triggered or hits that optimal entry. And so if there's a previous signal that did, then we'll stick with that up to 4 days. If another signal does hit it, then we discard the previous signal and go with the current signal. And that's actually where we're at right now, because we had a signal that triggered back on the 7th, and then 2 days later, this new signal triggered. So now we're rolling into this new trade. That's where we're at now. Titan Cloud, curious if PatternCast pattern technology omits the most recent data and focuses on past data. Recent as in the last 30 days. Well, like I said, it's kind of a running window that it's looking at, and then evaluating that against the entire history of the data. So it's not looking for a specific pattern within that data and saying, as if you had like a lexicon or a book full of patterns. Like you have, if you went to the pattern site, you would notice that they have all these patterns. They have about 30 patterns. PatternCast isn't doing that. As a matter of fact, PatternCast can see literally hundreds of thousands of patterns. And I mean, I guess theoretically, it could see unlimited number of patterns within that data. And each time it will come up with this sort of unique pattern that it found. So it's looking at that, let's say the past 20, 30 days, and then seeing patterns that have occurred. Now, that pattern might not occur in that entire 20. It might occur any portion of it, but then it's looking at, well, what happened after that? And then if it saw that happen, a significant amount of times, it will report it back to us. And we get all of that data. We get all the different striations of the possible things that could have happened. So on every signal that we get, and if we say, okay, this is the optimal entry, we also know what happened on a lower entry, a tick down below that or that, or above. And then what was the result after that too. And so that is all really rich information. Now, we don't share that with everybody. As a matter of fact, later on, that we were intending on that being part of a pro service. It's not necessary. Most people just want the sweet spot. Hey, give me the most likely thing, or the thing that happened the most, the thing that has the highest win rate and the highest return on capital. And so that's what we report back. Can we have an idea of the equities market and China deal, et cetera, heading to the winter? So if you're a PatternCast, not a Bitcoin cast, but a PatternCast member now, you know that recently the number of signals that have been reported have been much smaller, and that's because we're going through a software update. And I want to report back to you now that it appears as if we are finished with the testing, and we're going to deploy that new version of PatternCast. And so we're going to start getting up to the bigger range of signals that we used to put out. Sometimes we would put out as many as 15, even 20 different opportunities. Recently, it's only been a few, because a lot of it had to do with doing it manually and not having it all automated. So going forward, we're going to start including a lot more equities, the full breadth of all the futures and major Forex peers. Also, I'm going to start a market segmented PatternCast. It'll be much lower cost, but it'll be focused on specific market. And the first one we're going to do is precious metals. And then we're going to try energy and agriculture. And the precious metals one will look at all the futures related to precious metals, the ETFs and stocks as a bundle. And it'll be a relatively low price for those people who are into precious metals. And so we'll have a PatternCast service that's focused just on that. Do you have a spreadsheet data showing the 24 trades so far with the PatternCast? I would love to check it out if possible. We will. Probably next month, after we get. Right now, it's kind of hectic because I just got finished, bringing out the Bitcoin cast thing. We're now going to expand the regular PatternCast, and I'm introducing the metals service, and we're going to be starting webinars with our broker partner in the middle of the month in another week. So I'm kind of, balls to the wall here. So it won't be until probably the end of this month that I'll have data to go back from the beginning. If you were a member, I suppose you could go back and look at all the different emails that we've sent out. But right now, out of about 23 signals that have triggered, we've had 20 winners. And we're right in the middle. This would be the 24th one. We'll wait and see what happens here. Ernie, can I get an invite to the BitcoinCast channel in Discord? Are you a member? Crypto Yo, when will the new PC system come out? This weekend? Well, I talked with my partner, and it looks like it's ready now. We just finished the testing last night. He was up all night. If you saved all the emails, maybe you could put together a spreadsheet for us. That'd be kind of cool. But I just don't have the time to do it right now. We have all the data tabulated, but then we'd have to go through and extract it all into another data sheet that I can report on. The other thing is that our broker partner doesn't like us to put the results up on the website, because then they say that, they actually showed us a case with the CFTC that could lead to problems. So because we want to do business with the broker partner, the results I've hidden the results on the website, but people that ask, I will give it to them. Send me a DM with your name and email on Discord. I can't remember everybody's, who everybody is. So I see people's, handle, and I recognize that, but then I don't relate that back to people's names. It's kind of hard keeping, over 300 people in your head. All right. So that's the status update. Like I said, it looks like we'll. You're welcome. It looks like we're going to have the new version of PatternCast out for today forward. I'm not sure it's going to start today. It might be tomorrow. And then I'm going to introduce, right after I get that and get that in my hands, we're going to start creating the metals service right away. So if you're interested in the precious metals service, we'll be looking at the futures. You're looking at gold, silver, platinum. We'll be looking at all the ETFs, including things like the gold miner, as well as significant stocks. And that'll all be one package for a nice price. Sean is in love with the MACD. Okay, that's it. I've got through this whole thing without yelling at anybody. Thank you very much. Please go down, hit the like button, and share this in your social media. Would really appreciate it. Automated emails. We're getting closer to automated emails. Closer. There's still a lot. See, the thing is, when you're developing something like this that at first you didn't, it's just two guys, and we never really intended it to be like this big thing. Now it's growing, and at the same time we're trying to add new capabilities. And quite frankly, some of our development help hasn't been as responsive as we'd like, and so we're changing all of that, and we're fixing things. And at the same time growing, and also trying to serve, these collaborative things that we're doing with partners. It's kind of tough with two guys. Small business woes. But we're going to get there, Sean. All right. Y'all, thank you very much, and we'll see you next video.